Good morning. My name is Maurice Crespi. I'm the managing partner of Schindler's Attorneys. Schindler's Attorneys is a co-founder of COBRA. COBRA is founded by Schindler's, IQ Business, and Engaged Business Turnaround. The idea behind COBRA is that we pool our resources, we pool our skills, our expertise together, and we assist businesses in distress whichever way possible. We're doing so on a pro bono basis to the extent that it's required. We will place you in business rescue if needed, though COBRA is not about placing you in business rescue. COBRA is about avoiding a business rescue. The idea is you hop into the COBRA ecosystem and we negotiate with your creditors. We have professional mediators who jump in and strike arrangements so that business rescue and the moratorium that comes with business rescue is not required. We provide advice via Zoom sessions if required. We have the most comprehensive knowledge base on our website. That's www.cobra.org.za. And we also provide webinars by industry experts, such as today's webinar. We have these webinars every day, so please bear in mind that we'll have further webinar tomorrow and even tomorrow afternoon and every day next week. Today, we are joined by Alan Miltz, who will be giving a webinar titled Cash is King, Understanding the Important Difference Between Cash Flow and Profit. Cash has never been more important. Businesses need to create a fortress balance sheet. They need management teams who will embrace the numbers and make better decisions to improve profit, cash, and value. Alan has dedicated his life to making the complex simple. His techniques and software to improve business performance have become a global standard and are used by 500 global banks and 30,000 businesses. Revenue is vanity, profit is sanity, and cash is king or queen are usually his opening words when you meet him. His passion is to help business leaders, and everyone in their team love the numbers. Alan believes that running a business is like managing a sports team. Everyone needs to know the score. Everything Alan has developed has had one common theme: to make the complex simple. As the founder of InMatrix, known as Optimist Software in 1998, which is now the global standard for over 500 banks in more than 50 countries. And more recently, he co-founded CashFlowStory, which allows non-financial individuals to easily analyze and improve business profit, cash, and value. The Power of One developed by Alan and the team at CashFlowStory is how you do this, teaching you how many 1% or one-day changes do you need to make to achieve your desired financial results. This has helped thousands of businesses to scale to profit 3 times cash and 10 times business value. He is also a co-author of the global best-selling book by Veem Hamish, Scaling Up. Having written the financial component of the book, Alan has been voted best speaker in Australia for TEC, the world's largest CEO forum, and continues to speak at many CEO conferences globally, including CEO Syndicate in Australia, Entrepreneurs Organization, and YPO. He also sits on the boards of 15 well-recognized companies globally. So that's quite a bit. I'm suitably impressed. So Alan, over to you. Thanks so much for joining. Before I do hand over to you, I will introduce my remaining panelists: Emma Marseille from IQ Business, Renee Klopper from IQ Business, and Adam Kraker, the CEO of IQ Business, Paul Michael Keichel of Schindler's Attorneys, and we have Gary Barachowitz from Schindler's Attorneys and Tasneem Khan from Schindler's Attorneys, and finally, Peter Gordon from Engaged Business Turnaround. Alan, over to you.
Thank you so much, and Maurice, much appreciated. And it's good to see Adam on the call as well. Greetings from Melbourne, Australia. As you can hear from the accent, I grew up in Cape Town and I went to university at Cape Town University, studying to become a CA. I'm going to share my screen now. So as Maurice said, never before has cash flow been more important. I'm getting a phone call every hour of every day, and the call is starting with cash. And hopefully today, in the next 45 minutes, I'm going to share some concepts that can help you change the way you look at your business. And as introduced, I'm a co-author of a global best-selling book, Scaling Up. Vern Harnish wrote the book, and it's based upon the 4 key decisions. So as a CEO, you need to master the 4 key decisions: people, strategy, execution, and cash. My component today is cash. But the one point I want to add, if you don't have people excellence, you will never be able to implement my techniques today. And as Maurice said, your business is no different to a sporting event. If you follow Jim Collins says, get the right people on the bus. I call these people A players. An A player, by definition, wants to win the game. And winning means making more cash. We need to understand today, what better decisions can we make to improve cash flow? Vern Harnish says very eloquently, you can get by with decent people, decent strategy, decent execution, but not a day without cash. You run out of cash, game over. As a gift to South African business, based upon my heritage and my relationship with Adam Cracker, our technology, the CashFlowStory software, we are donating at no cost for the next 3 months. So if you go to that website, which I've highlighted, you can get access to our software, and all the concepts I'm going to go through tonight can be implemented seamlessly. This is what we're going to learn. How to create a one-page scorecard. There are 3 critical cash flow measures. I probably will do 2 tonight. Once we know your cash, the next area is improve. I want you to make more money. How many power of 1 changes do we need to make to improve your cash? The past is very different to the future. Let's do a projection, and then let's stress test our numbers. The company I'm choosing is an actual company in Australia which has been absolutely decimated by the COVID-19 crisis. Mylock imports hair care products, shampoo, conditioners, and we sell it to the beauty salons, the hairdressers, and the pharmacies. In March 2020, the Australian government closed beauty salons and basically shut the hairdressers. Mylock, who was doing well, basically fell off a cliff. Let's start in December 2019, before the crisis. And George Mylock says to us, over the past year, revenue's up by 12%, from 21.5 to 24 million. And then George Mylock says operating profit is up 22%, from 1.8 to 2.3 million. And after interest and tax, we've had a brilliant year. We've made 1.5 million. And every company I ever go into, this is what the CEO describes. The CEO describes revenue increasing 12%, operating profit going up 22%. Every period we've had an improvement in our KPIs in profitability. And then the CEO says business is great. And I start and I end every talk the same way. Revenue is vanity, profit is sanity, cash is king. But my biggest problem is people don't understand cash flow. So what is the cash flow of Mylock in the current year? The accounting profession, which I'm part of, has made cash flow into a very complex topic. You've got to make the complex simple if you want your people to embrace the numbers. Cash flow can be explained in the most simple way. Start the year with $10,000 in your bank. End the year with $1,000 left in the bank account. What is your cash flow? -9. Cash flow definition number 1. After everything happens, we've made a profit of 1.5 million. After everything's happened, your net cash flow is the change in your borrowings plus cash at bank. Cash flow is the movement in all your bank accounts. Every single board that I sit on a weekly, monthly, and quarterly basis, I get the following reconciliation. In the Mylock group, cash at bank has had no movement. Short-term debt, another bank measure, has come down from 3.1 to 2.8 million. That's good. We've got less borrowings. We've repaid the bank 300,000. And our long-term debt has had no change. So if you said to me, what's the cash flow of the Mylock group? Cash flow definition number 1. And one of the traits of a leader is repeat, repeat, repeat. Make sure your key ideas, you repeat, repeat, repeat until your management team get it. Mylock, your net cash flow is 300,000. Your profit is 1.2 million. So if I was sitting down with the team and the company said to me, profit is up, revenue is up, my answer is, why is there a gap of 1.2 million between your profit and your cash flow? So the first concept we've learned today, your profit is very important, but cash is king or queen. Cash is the movement in all your bank accounts. Every single period, have a look at the movement in all your bank accounts, and that's your cash flow. Now, in most companies around the world, all the CEO ever focuses on is the profit and loss. And the reason is the profit is so easy to understand. As George Mylock explained to his team, the balance sheet is complex, but the balance sheet is equally important to your profit. You will never understand a story of numbers if you look at your profit. You equally need to understand your balance sheet. And again, you can make a complex balance sheet simple. I can explain any balance sheet in one sentence. Funding equals operations. That is your balance sheet in one sentence. Funding is either debt or equity. That's the way you fund a business. So if we look at Mylock's company, Mylock's got equity of 4 million. And let's look at the debt. We've got 1 million long-term debt, 2.8 million short-term debt. That's 3.8 million of debt. And I've got 100,000 cash in the bank. Mylock, your net debt is 3.7 million. The company has therefore got 7.7 million invested in operations. Funding equals operations. Your management team is responsible for 3 items in the balance sheet. Your management team is responsible for your accounts receivable, how quickly people pay you, your inventory or work in progress in a service company, minus your payables. So your management team are responsible for how quickly you get paid, how much inventory you hold, or how quickly you invoice the client for the work you do, and how you pay the suppliers. These three items are called working capital. Working capital is typically measured in days. In Milok's company, there are three items: receivables, 5 million, inventory, 3.2 million, and Milok's got payables of 3.5 million. Milok, your working capital are three items, 4.7 million. So in other words, within operations, we got 7.7 million. 4.7 million is under the control of your management team, the working capital. The rest of the balance sheet has got myriads of terms that you will never explain to a non-financial person. Terms like accruals, prepayments, provisions, deferred tax. The rest of the balance sheet, the complex terms, I just call other capital. So it has to equal 3 million in Milok's company because operations is 7.7. And in this company, there's one item. We got $3 million invested in a land and buildings. So let's repeat. If you said to me, Alan, numbers have never been more important. Your management team are going to be making decisions every day that are going to impact your business. If we do not teach them the story of your numbers, they will make decisions that can negatively impact your business. And then I said to you, revenue is vanity, profit is sanity, cash is king. Cash flow definition number one. After everything's happened, what's the change in all your bank accounts? That's your cash flow. So if we look at Milok's company, at the beginning of the period, I want a list of all the bank accounts, the short, the long-term debt, the cash. The movement is your cash flow. Milok, you've had a 300,000 reduction in debt. You've made 300,000 cash. I then said to you, your profit and balance sheet are equally important. We've got to make this complex balance sheet simple. We can do so by explaining it in one sentence. Funding, debt plus equity. We got 4 million equity, 3.7 million of debt. We've therefore got 7.7 million invested in operations. Within operations, your management team are responsible for three items. Repeat. How quickly people pay us, our inventory, or our work in progress in a service company, and the way we pay suppliers. Milok, you had 4.7 million. Therefore, the rest of the balance sheet, the myriad of terms not responsible or not controlled by the management team, you got 3 million in other, and I call it other capital. So if I was having a meeting with the management team of the Milok Group, this is what I would say to them at the end of December. 4 million equity, 3.7 million of debt. Where did we spend the money? We got 4.7 million in working capital, and we got 3 million in fixed assets. Lesson number one. What do you all want to make? Times are tough. You all want to make more cash. That's the result that you want to get to. I've also said to you that your management team is not responsible for other. This is the result of your company. The movement in debt is your cash flow. So in other words, at the beginning of the period, we had 4 million in debt. At the end of the period, 3.7. You therefore made 300,000 cash. The movement in equity is your profit. So in other words, we started the year with 2.5 million equity. Mylock, you did a brilliant job. You made 1.5 million profit. You therefore ending with a 4 million equity. So now let's have a look and see what's happened. In the Mylock group, they made a 1.5 million profit. Equity's gone up. From a funding perspective, we made 300,000 cash, which we've now repaid the money to the bank. So our debt has come down. Mylock, you made 1.5 million profit. You repaid 300 to the bank. You've therefore got 1.2 million of extra funding. Where did you spend the money? Your balance sheet always has to balance. Did you spend your money in working capital or in other? So let's go back to the Mylock financials. When we look at Mylock's numbers, we're saying debt plus equity is working capital plus other capital. I've made a 1.5 million profit and I've repaid the bank 300,000 debt. So therefore 1.2 million, where did I spend the money? Did I spend it in working capital? Receivables is up by 1 million. Inventory is up by 700,000. And my suppliers, the other element of working capital, has given us 500,000 help. Mylock, you've grown your working capital by 1.2 million. So this is where Mylock spent their money. They made the profit, they repaid the bank. Where did we spend the 1.2 million of funding? We grew the working capital by 1.2 million. So if we're now sitting down with the management team, this is what we're saying to them. Ladies and gents, we had a great year. We made 1.5 million profit. We generated 300,000 cash. We repaid the bank the money of $300,000 off our debt. We've increased the funding by 1.2 million. Where did we spend the money? We grew working capital. So what am I saying to all of you? I want all of you to make more cash. The way you make more cash is teaching your people to make more profit and reduce your working capital. So in other words, if I want to teach my management team, cash flow is the result of a business. Cash flow is the movement in your bank accounts. That's how we calculate it quickly. But if you want to make more cash, management team, what can we do with our prices? What can we do with our volumes? What can we do to grow our margins? Let's go through every item of overheads. What can we do to reduce the overheads? I then look at working capital. How can we educate customers to pay us more efficiently? What can we do to have better inventory management, or in a service company, invoice more frequently? Invoice in advance, if possible. Go to your suppliers and renegotiate terms with all of them. We want to make more cash. So a story of numbers is told in 4 chapters. Chapter 1, every business I ever walk into gets it. Mylock says I did a brilliant period. I made 1.5 million. I then say to Mylock, well, the result of your business is cash flow. Cash flow is the change in all bank accounts. That was 300,000. You will never understand cash by looking at profit. It needs to be a logical story. Mylock, you made 1.5 million profit. You then spent 1.2 million in your working capital. You grew your receivables, your inventory, your payables by 1.2 million. You spent no money in other. Can you now see why you generated 300,000 cash? So when I'm sitting down with an organization, I'm saying to them, your business is no different to a murder mystery. It's a murder mystery told in 4 chapters. You will never know the murderer by reading chapter 1. You made 1.5 million, the result is 300. As soon as you've discussed profit, ask your management team, what has happened in our receivables, our inventory, or our work in progress minus the payables? Well, Mylock, you spent 1.2 million there. The rest of the balance sheet, we spent nothing. Can you now see why we made 300,000? I want you to make more cash. How can we grow our profit and shrink our working capital? That's what you want to do. You want to teach people to grow your profit and shrink your working capital. Your management team are, as I mentioned earlier, it's no different to a sporting event. Your business is playing a game. The score of your company is cash. Cash flow is the result of your profit and your working capital, and if applicable, chapter 3. Your management team are only responsible for chapter 1 and chapter 2. Now, one of the things Maurice said when he introduced me is I've worked with some of the global banks, and in South Africa, First Rand uses all my processes. What I normally say to companies is that business and banks speak a different language. We speak Spanish, your bank speaks Portuguese. It sounds the same, but it's different. Every business I go into is talking about profit. Every bank is talking about debt service capacity. You will never understand your bank by looking at chapter 1 profit. If you want to understand your bank, you need to become a 4-chapter storyteller. What happened in profit? Let's discuss working capital. Did we spend any money in other? We can now understand cash flow, which is the movement in all our bank accounts. Or if I had to reconcile it, cash flow is the result of chapter 1 profit. What's happened in chapter 2 working capital? Did we spend any money in other? Can you now see why we generated 300,000 cash? The bank is looking at chapter 4 and saying, can you repay us? If the bank is worried about you, it means you've got a cash problem. If the bank is worried about you, you should be worried about you. A story of numbers is told over 4 chapters. Do not read chapter 1 and expect to understand your story. A story of numbers is told over 4 chapters. Your management team are responsible for chapter 1 and chapter 2. So this is what I typically do in a business. We've got to create visibility. So when I'm sitting down with a company and I'm explaining chapter 1 and chapter 2 to a business, I normally say to the CEO, explain your profile. What should your business look like if you ran it properly? Cash flow is that people need money when they grow. People also need money when they're declining. Cash flow is also the result of management. If your management team doesn't do a good job in your business, cash is going to be going out of your business to fund inefficiency. Your management team are responsible for profit and working capital. So Mylock says to us, if we run the business properly, we want to make 40% margin and 12% profit. We need to collect in 60 days, hold 50 days of inventory, and pay suppliers on day 60. I then say to the management team, you might not understand numbers, but you will certainly understand colors. Cash flow is the result of growth and management. Management's either doing a good job, an average job, or a bad job. A green, a yellow, and a red. So for example, Mylock says if I get greater than 40% margin, I'm very happy, it's a green. 37 to 40 is yellow. Go below 37 is red. Greater than 12% profit, excellent. 10 to 12 average, less than 10 bad. Collect quicker than 60 days, excellent. 60 to 70 is a yellow. Greater than 70 is a red. When I sit down with the management team, every month I can show them their colors. Mylock, do you realize why you haven't made enough cash? Cash is the result of your profit and your working capital. Do you realize, Mylock, you only made 300,000 cash? Your profit is being run in color code yellow, and your working capital is being run in color code red. When you go to London and you catch a train, every time you arrive at the station, the announcement is made, mind the gap. The announcement I'm making to every management team every month on all the boards that I sit on is mind the gap. You will never make enough cash if you run your business in yellows and reds. Mylock, you got a 2.5% gap in margin, a 2.5% gap in profit, a 16-day gap in collections, and a 28-day gap in inventory. Can you now see why we're not making enough money? We need to teach our management team. They are responsible for profit and they're responsible for working capital. Every time you have a meeting with your team, discuss with them how to move in that direction. Explain to them when you go in that direction, money goes out of your business. Cash is the result of growth and management. Management is responsible for chapter 1 and chapter 2. Now I'm going to teach you a concept that will change your lives forever. And I've called it the power of one. This is the heart of my software. The management team of a company are responsible for profit and working capital. There are only 7 things a management team can do to improve your profit and cash. So in other words, if I want to improve my profitability, I can change it so it's revenue minus cost of goods is gross margin minus overheads is operating profit. If I want to fix my profit, I can change my price or my volume. I can purchase better, manufacture more efficiently, or in a service company, utilize people's time better. I can also go and look at every line item of overheads and make sure I've got efficiencies in all my overheads. If I want to improve my working capital, I need to collect faster, better manage my inventory, or invoice more frequently in a service company and renegotiate the way I pay my suppliers. The result of your business is cash. There are 7 levers that you can employ in a business to fix cash, make more cash. There are 4 profit, and there are 3 working capital levers. This is what my technology that I'm giving to you at no cost will produce. The power of one. Sitting on your boardroom table in front of your management team needs to be the power of one. And in Mylock's company, put prices up by 1%, cash will improve by 190, and profit by 240. Sell 1% more, Mylock, your cash will improve by 43,000, and your profit by 90. Sales team, do you realize price is 5 times the sensitivity of volume to cash? How can you allow a salesperson on the road if they don't know the relationship of price and volume to cash flow? Mylock, mind the gap. You've got 2.5 gaps in your margin. Every 1% is 147,000. You've got 16 gaps in receivables. Every day is 65,000. You've got 28 gaps in inventory. One day is 41,000. If all Mylock does is change a 1%er, their cash goes up by 594,000. Currently, cash flow is 300,000. Mylock will triple their cash flow by making a 1% change. What I'm saying to everyone now in South Africa, make the power of one part of your DNA. Make sure everyone on your management team, before they make any decision, they're going through these 7 levers and they're saying, what can I change? How many 1% changes can I make? And this is what I typically do on a quarterly basis. When I'm having a management meeting, we have a power of one discussion. And for example, in Mylock's company, they've decided they can put prices up by 2% and no reason why we couldn't collect 7 days faster. That will improve cash by 840 and profit by 480,000. And this is how to run the workshop. Go to your whiteboard, or if you're on Zoom, write down the numbers and put the 7 levers down the side of your board. Give everyone on your management team these little sticky notes. Lever by lever, you need to workshop. After you've workshopped each lever, come back and put your best ideas, or put your ideas from most to least sensitive. You will then choose the top 1, 2, or 3 ideas that you're going to implement. A lot of ideas might be linked. But what you want to do is implement the power of one into your company. Then get your management team every 3 months to run a power of one workshop and choose these ideas that you're going to implement in your company. Let's just go for a few more minutes and I'm going to answer questions. Assumptions of the past no longer apply to many businesses. In March 2020, business at Mylock was slightly impacted. COVID hit Australia and Mylock fell over the cliff. Hairdressers, beauty salons shut, and we lost 80% of our revenue. And Mylock now presents his March actuals and his June forecast, or the June budget. And Mylock says in March, we're going to make 4.6 million revenue, 260,000 profit. In June, 785,000 revenue, and we're going to budget for a 1.3 million loss. And Mylock then says to me, Alan, I need to go to the bank and borrow. How much do I need to borrow? And then I say to Mylock, debt plus equity is working capital plus other capital. That's your balance sheet in one sentence. You're going to make a 1.3 million loss. And your question to me is, how much do I need to borrow from the bank? Well, the first thing, Mylock, is look at your working capital, because your balance sheet has to balance. Can we get our working capital to fund some of this loss? And Mylock says working capital's 3 items. My business, my clients are closed. I will only collect 200,000 in the next quarter. And Mylock says with a very low revenue, we'll probably only reduce inventory by 300. And Mylock, who's a very loyal person to the suppliers, says they're screaming, I'm going to budget to pay them 500,000. Well, Mylock, if you do this, you'll get no benefit from your working capital. And Mylock also says, for the rest of my balance sheet, the other capital, I'm not going to sell off any equipment. I'm not going to sell my land. So the only way Mylock can balance the equation is to go to the bank and ask for 1.3 million. As expected, the bank says excessive. Stress test your business. So Mylock would then need to do the power of one and change their assumptions. So the two assumptions Mylock says they can change is we're not going to pay the suppliers as quickly. We're going to pay them 100,000 less than the budget, and we're going to reduce overheads by 20%. So if Mylock implements these changes, he doesn't need 1.3 million. He needs approximately 882,000 will be the borrowings from the bank with these two assumptions we're going to implement. So let's now go back to what I said I'm going to deliver. I said to you, my technology, my software can be downloaded at no cost. I then said to you, what we're going to learn today is cash is king or queen. A story of numbers is told over 4 chapters. Profit, equally important, working capital, other capital, resulting in chapter 4, cash flow. There were 3 cash flow measures. I've only had time to cover 1. After everything's happened, your net cash flow is the change in all bank accounts. All of you want to make more cash. There are only 7 things you can do in a business to make more cash. Price, volume, cost of goods or direct costs and overheads, receivables, inventory or work in progress, and how we pay the suppliers. Every quarter, make sure your power of one is in front of your management team and you are running this workshop, challenging each one of these levers. Your business is no different to a sporting match. There's got to be a score. We got to teach people to play the game better. There are 7 ingredients to play the game better. Your non-financial people need to understand the numbers. They're playing with 7 balls they're juggling. The power of one. The future is very different to the past. Make sure you're looking at the future and you're applying the power of one to challenge the results. I started today and I said revenue is vanity, profit is sanity, cash is king. I'm going to end the same way, and I'm now going to open up to questions.
That's fantastic. Thanks so much. I see we have several questions. I'm going to kick off with the following. Let's have a look here. I'm a one-woman band, and these things are rather complex, but this makes things a lot simpler and easier to grasp. Thank you for that. Do you have any issues with your cash flow? We've got that. What is the most important power of one lever during COVID?
Price. Price is a gift that never stops giving. If you change your price, it impacts your cash and it impacts your profit. Price is the gift that never stops giving. If you fix your collection days, it's a once-off benefit. But price is the most sensitive lever that you will have. And I always say to companies, if you cannot enunciate your value proposition, everything's about price. People always say to me, it's all about price. But if you can't explain the value that you provide to your customer, you'll be price driven. Okay.
We have Yeah, we have another question. How does one establish a target for cash generation?
How does one establish a target? So what you got to do when you're developing your budget, understand, and again, if I had to do this properly, I would need 4 or 5 hours. So we'll speak to Adam and we'll work out what we can do. But you need to explain to your team what color code green looks like. Color code green means you're running your business properly. And then you need to show your team what we're getting each month and how can we change to move from a yellow to a green or a red to a yellow. Cash flow is the result of growth and changes. We need to teach your management team what is color code green and how they're going to get there.
We have another one. For my company, we manufacture packaging for food, beverage, personal and home care brands. Revenue is down 40%. Key actions taken are the reduction of production days and weeks from 6 to 4, renegotiation of bank loans, principal interest repayment terms, collect aggressive, more selective with giving credit to customers. Everyone is a cost cutter and everyone is a salesperson. Do you want to comment on that?
Well, I think that's obviously, I don't know the company. I haven't seen their financials. That's difficult to be specific, but I think what that company's done sounds spot on. It's a matter of going through every one of those 7 levers and make sure that you've addressed every one of them. So in overheads, for example, go through line by line in your overheads and make sure that you've actually dropped them to the bone.
We have another question here. Creditors have reduced payment terms from 90 days to 30 days and have reduced credit limits. Severe cash constraints. Any advice?
Well, that's why it's so critical to have your bank on your side. What I'm always saying to companies is the bank is your partner. Funding equals operations. Debt sits next to equity. Basically, you've got to demonstrate to the bank that their money is in a safe set of hands. And if they're going to lend you more money because of the COVID crisis, one day you're going to have to repay it. So if you're being pulled in one lever, see which other levers you can pull, but concurrently make sure that you've got your bank absolutely as a partner in your business. Banks hate surprises.
We have another question that has been answered by one of our panelists, Peter Gordon, but I'm going to put it to you as well and get your views on it. Currency devaluation sometimes has a huge impact on cash flow when vendors stroke bank dividends need to be paid in US dollars. How do we better manage this aspect of cash flow monitoring and management?
Again, because I'm out of the country for so long, I think that's not really something I want to answer in case I'm giving the wrong advice. But I'm sure people on this particular panel will be more educated than me at the moment on that.
For the benefit of our Facebook viewers, let me read the answer by Peter Gordon of Engaged Business Turnaround. Hi, you are correct. It's always a big risk to a business to borrow in Forex when income is earned in a volatile currency such as South African rands. Even though interest rates look attractive in US dollars, this benefit is negated by the Forex depreciation. The best way to manage the exchange rate movements is to hedge against the movement. This involves entering into a forward exchange contract FEC with your bank. The banks are all geared to offer such support. Ask the bank about the option rather than an FEC, as the latter is a fixed contract, i.e. you have to settle the contract by way of cash. An option, on the other hand, is more flexible. Your bank can advise. So I think that's quite important. You can take out FECs, you can peg the currency, particularly if you're operating on terms, at least you'll have that certainty when it comes to payment. Alan, I want to ask you, something that we've found, and this is more now in the COVID distress scenario, is that a lot of contracts have provisions in them that actually compromise one's cash flow. So, a good example would be an acceleration clause in the contract. Do you have any advice around that? Because what's happening now is these acceleration clauses are triggered, and it's actually making it's putting the businesses in a worse off situation. So now, from a contractual point of view, surely one must also be mindful of what one negotiates when taking out these loans, because the moratorium, the bankruptcy protection, is now, there's a greater need for it because of those provisions. Do you have any comments around that?
I think, again, Maurice, in Australia, we don't have those scenarios. So I think your advice is probably a lot more educated than mine.
Brilliant. Okay, I'm going to just conclude by dealing with the question of cash flow in the context of businesses in distress, in the context of our legislative framework. So, Alan, let me tell you how it works here when it comes to bankruptcy protection. Firstly, and I'm sure this is in most jurisdictions, we have the notion of factual insolvency and commercial insolvency. In South Africa, commercial insolvency is where you're unable to meet your debts as and when they fall due. So in other words, where you have cash flow constraints, then you commercially, potentially insolvent. Now that's obviously what you don't want to be, but your liabilities can in fact be less than your assets. In other words, your assets can exceed your liabilities, but you're out of cash and you are known in our law as commercially insolvent. And that is where it is appropriate to trigger the moratorium in business and place the company in business rescue. That would then give you that breather. The business rescue practitioner would come in, negotiate with the creditors, your creditors, and try and strike those arrangements to get you back on track so that you can then continue with your business and then focus on the software, as Alan has presented, is to really improve the efficiencies and get yourself back on track. Just a last word, Alan, do you have anything to say around COVID and the situation that everybody finds themselves in? I mean, it is a peculiar situation.
It's a completely peculiar situation, but you know, Maurice, I've been saying the same thing for years to companies. Make cash the cornerstone of your business. Make sure people understand it. Unfortunately, when the crisis hits, people realize, why didn't I do it? So many companies I'm walking into, their cash flow is the result of bad management. So I'm saying going forward, I can't change the past, but I can say to you, make sure going forward the 7 levers and cash become part of the DNA of your business.
Thanks for that. You're about to say?
No, I'm just saying it's a terrible thing to say, but a lot of companies are going to make a lot of money out of this crisis. So don't let a good crisis go without getting the benefit as well. There's going to be a lot of opportunities.
There's a famous quote out there along those lines. Last week, I just can't recall who it was. Well, thanks for that. Alan has demonstrated the power of COBRA, the IP, the intellectual IP of COBRA. Alan has made his software available, which is part of the offering and is part of the manner in which COBRA assists businesses. So please look out for that. Please email us if you have any further questions for Alan. If you want to meet with any of the COBRA partners on a one-on-one Zoom session, if you require further particularity on any aspect of these webinars, these presentations, or anything on our website, please just reach out and communicate with us so we can assist. Alan, thank you so much. To the panelists, thank you so much. And of course, to the attendees, thank you so much. Before I go, let me mention we do have a webinar tomorrow, which is surviving the lockdown and how to future-proof your business beyond the pandemic with LabourNet experts, Lauren Mostert and Duncan Carlisle. So that is going to be super interesting. We'll be dealing with employee-specific issues when it comes to the question of vis major, when employees can be paid, how does one reduce salary in circumstances where there's a need, and what effect does the moratorium have on employee contracts. So please join us tomorrow. Until then, thank you very much. Cheers. Bye-bye.